Adobe just reported earnings. The stock is up only 2.5%, which is nothing after it was down 40% over the last year. It went from 55 times earnings to 16 times earnings. It's down 40%, and it's only up 2.5%. They mentioned AI 110 times on their earnings presentation, and it didn't work too well. It only moved the stock 2.6%. So I'm going to talk about Adobe today, let you know my opinion around the report, my valuation model, upside potential, and the risks of AI. So I hope you enjoy it as always. Now, for the latest report, they actually did really well. They beat on the earnings per share estimate. They got 531 versus 518, which was a very strong beat. They also beat on revenues, slight beat, but it was a very good beat in general. In terms of expectations for the fourth quarter, they expect 535 to 540 in earnings per share versus the expected was 534. So it also came out above expectations. They beat on earnings. They're growing revenues 11%. And I'm not seeing where AI is killing Adobe. In fact, I told you that Adobe mentioned AI 110 times in their earnings presentation, which I found very interesting. And they said AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. They're not just sleeping on AI, but they're doing their best to integrate AI into their existing products, create new products within AI, and try to maximize their AI-based revenues. And the company is doing it again in two main ways. The first one is the existing portfolio, and they call it AI-influenced kind of portfolio annual run rate. And last year, it was $3.5 billion, where they have the existing products and they use AI to make them better. Then they have something else, which is called the new AI first products. And those are like the Acrobat AI Assistant, which is popular, and other kind of 100% AI based products. And they expect 250 million in annual run rate by Q4 of this year. Now, if you look at the latest numbers, so far the Adobe influence portfolio has surpassed 5 billion, and we expect it to continue to rise as a percentage of our business. So last year it was 3.5, now it's 5 billion in terms of AI influenced revenues. Now, in terms of the 100% AI based portfolio, they were targeting 250 million by the end of the year, but they said they have already achieved our end of the year target of 250 million. So we have one quarter left, and they already achieved the 250 million. So things have been going faster than expected. It was zero last year. Now it's 250 million. Now, again, 250 is nothing for a multi-billion-dollar company like Adobe, but it's a good step towards the right direction of them not sleeping on AI, but using AI to make their products better, or also create new products for them to monetize AI within their overall business. Now, Adobe also has a moat, or you could say a competitive advantage, which isn't really too priced in the company. And this is mainly the Adobe PDF. I mean, how many of us use PDF? PDF is very popular around the world, and Adobe owns it. There's over 650 million monthly active Acrobat users. There's over 3 trillion PDFs all around the world, and there's 400 billion documents opened annually within Adobe Acrobat. The potential of potentially, again, monetizing those users and monetizing all those things. It's crazy, and Microsoft is trying to kind of do their own thing and take market share from the PDF, but most people still use Acrobat and they still use PDFs. Now, in terms of their cloud revenue, Creative Cloud Enterprise annual run rate has been compounding 50% CAGR. Experience Cloud has also been compounding 13% CAGR. And anytime you hear of a business that's dying, let's say, for example, PayPal is dying, or Adobe is dying because of AI, or Google was dying a few months ago because of ChatGPT, always look at the quarterly revenue growth. If we're starting to see quarterly revenue growth decline from 10%, 7, 5 to 1% going negative, then we're like, okay, we have to worry, okay? But if we look at Adobe's revenue growth, I'm not seeing any declines. It's still consistent 10 to 11% from December of 2022. So if AI was really killing Adobe, where is it in the numbers? We're not seeing it in the numbers yet. Could we see it in the future? of course. But again, so far, I'm personally not seeing it in Adobe's numbers. I'm seeing it as a narrative. And Adobe is taking advantage of this narrative by buying back a lot of stock, and they have reduced shares outstanding by a lot. And the company still has a good balance sheet for them to further reduce shares outstanding and create value for shareholders, as the company is not buying back stock at 50 times earnings. They're buying back stock around 16 times earnings. The company used to trade in the 50-time earning range, which I could have never believed. And the average was around 31 times earnings. And it was considered, again, a high quality, sticky business model, one of the best businesses ever. I remember the talks back in 2019, even in 2021. Now 16 times, it doesn't look too good. And, I'm seeing a lot of talks about the negatives and not enough talks about the positives. But 16 times earnings, I never expected that. And it makes the stock very interesting, especially as they have no dividend and they're using their free cash flow to do a lot of buybacks. Now, in terms of my valuation model on Adobe, it's pretty much still the same. I have the current earnings per share of 2057, which they will ultimately beat, in my opinion, but I'm using 2057 for 2025, then 11% growth to 2030. Now, it could end up being higher if revenue growth sustains at 10% and then they buy back 4 or 5% of the market cap. Earnings per share growth could end up being 15%. But I'm expecting that maybe AI is going to affect the revenue a little bit, and then maybe the growth will decline. But combined with some buybacks, Adobe could pretty much generate 11-12%. And this is what Adobe has been generating, 14% last year. This year is expected to be 11% earnings per share, then 12%. I think 11 to 12% is fair. The current PE is 16 times. I'm using 20 times. I believe once this narrative is over and the market realizes that Adobe is actually benefiting from AI, it's not getting killed from AI, I think the stock could pretty much go back to 18 to 20 times earnings. I would not bet on the stock going back to 30 times. I think that would be too extreme. It's not impossible, but I think it's too extreme. I think a reversion back to 18 to 20 times is more fair for Adobe, and especially for such high net income margins. Recurring revenue business should be trading at 20 times, easily 2-peg ratio for such business. That's what normally happens with a lot of the software stocks. They trade at 2-peg ratio because the business is sticky and they have some growth, good balance sheet. So 20 times earnings. The current price is $362. I'm getting $693, 92% on the upside, which is around 14% compounded CAGR from here, which is amazing, almost a double in 5 years. Now, if you want to get a double 100%, you would have to buy Adobe at $347, which is negative 4% from here, which is really nothing. So I would say Adobe looks very good over here. The earnings report was great, and I'm surprised that it's only up 2.6%. Maybe it changes on the open, which I'm going to upload the video tomorrow on the open, but I was expecting more because the sentiment is so bad. The company is still putting up good numbers and they're benefiting from AI, but the stock isn't doing too well. So this is my opinion on Adobe, not financial advice. Hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.